Good morning, everyone. We'd like to welcome you to this very special event that is kicking off this morning right now, and we have an extraordinary number of participants in the very first digital edition of the International Conference on Inclusive Insurance. My name is Katharine Pulvermacher. I'm facilitating this section, and I would very much like to hand over to Dirk Reinhard, the Vice Chair of Munich Re Foundation, with whom we co-organize this very special event every year, and this year, of course, for the first time, a virtual version of it. Dirk, over to you.
Good morning, everyone. Welcome, distinguished guests on the panel, dear participants, dear members of the steering committee of the International Conference on Inclusive Insurance 2020 Digital Edition. There are still a number of people coming in, so I hope you can all hear us. Ladies and gentlemen, dear friends, thank you very much for taking your time to attend this 16th International Conference on Inclusive Insurance. This conference happens at a very difficult time where an unprecedented pandemic is affecting all our lives and threatens the livelihood and income sources of millions of people. Why is inclusive insurance so important to us even during such difficult times? Well, people at risk are at the focus of the work of the Munich Re Foundation. Economic development is key to improve people's lives and increase their resilience against shocks. Sustainable economic development goes hand in hand with appropriate risk management on all levels. But millions of people who have gotten out of poverty in recent years still lack access to affordable risk management solutions, including insurance. And hence, when they get sick, when a natural disaster strikes, or when a pandemic strikes, they will be pushed back even deeper into poverty again and again. This current crisis, however, must not divert us from fighting an even bigger challenge, which is climate change. Extreme weather events such as storms, floods, and droughts increase in frequency and intensity. Climate change is happening, and we cannot ignore it. Recent events like the floods in Eastern and Southern Africa, Indonesia or Vietnam, or the locust swarms in East Africa and parts of India and Asia, or Typhoon Goni, who just hit the Philippines. They are just a few examples how natural disasters endanger the livelihood of especially those who depend on agricultural income. And climate change will make this situation worse. The fact that the Peace Nobel Prize went to the World Food Programme this year highlighted again that more needs to be done to ensure food security for all. Insurance against climate risk plays a key role at this year's conference, and 1/3 of the sessions address climate risk in particular. So what needs to be done? Just a few thoughts here. The insurance providers certainly need to increase their efforts in market research and product development. Understanding what clients need is key, and the insurance solutions must be sustainable and need to create value for the customer. Education is important. Clients need to understand what insurance can do and what not. And insurers need to well-trained insurance experts, certainly. The governments have to fulfill their role by creating an enabling regulatory environment, facilitate access to reliable data, and develop national health or disaster risk finance schemes to complement private insurance. Governments also play an important role in education. We also do need efficient distribution channels as well as access to reliable data. Mobile technology, for example, can help to reduce high transaction costs. Making payments in an efficient way plays a key role. However, no one can solve all the problems alone. Cooperation between governments, industry, as well as donor organizations is key. And I would like to see more national financial inclusion strategies and joint efforts by all stakeholders to foster market development. Examples from the Philippines or Zambia and other countries have shown that this can be very successful. This International Conference on Inclusive Insurance will touch upon many of the topics I just mentioned. It is a platform to learn. It aims at increasing cooperation among all stakeholders. Around 2,000 participants from over 120 countries have registered for this year's conference, a number which was beyond our imagination when we had to make the decision to cancel the conference in Jamaica and host this conference online. We must use this level of interest in the topic and turn it into sustainable solutions for those that are still left without protection. This conference is a joint effort of many partners. The Microinsurance Network has kindly accepted to take over the responsibility for technically hosting most of the sessions. And a big thank you to Katharine Pulvermacher and her team, as well as to the team of the Munich Re Foundation for supporting all the preparations. But I would also like to thank the ILO's Impact Insurance Facility, the International Agricultural Association, GSMA, GIZ, Milliman, MCII, EA Consultants, the World Bank and Senfree, as well as Asia Insurance Review as our media partner for their support. And I certainly would like to thank the Insurance Association of Jamaica, who is still committed to host next year's conference if the situation allows us to travel again. Ladies and gentlemen, dear speakers and facilitators, dear members of the steering committee, dear partners, having an online conference may not be the ideal platform to meet, but it gives us an unprecedented opportunity to start corporations across the globe in order to come up with better risk management for the poor. I encourage all of us to use this opportunity. Thank you very much, and I wish us all a successful conference.
Right, before we move on to our keynote speech, I think most of you are assembled now in the room. Just a few housekeeping matters. So today's ICII session is scheduled to last 90 minutes, including the Q&A. To ensure the highest quality of experience, please do mute yourselves. In fact, we will be muting you. And you can also, for this session, your preferred language between English, French, and Spanish by using the interpretation icon that you'll find at the bottom of your screen. Please submit questions using the Q&A feature. A selection of these questions will be chosen by the facilitator and myself during the session. Also to let you know that this session is being recorded and it will be made available later online. If you have any technical issues, you should please message the MIN executive team using the chat function. Thank you very much. We're now going to hear from Mr. Achim Steiner, head of UNDP, with a pre-recorded video statement. Please bear with us while we get this up.
Excellencies, ladies and gentlemen, dear colleagues. It is with great pleasure that I welcome you to the 16th International Conference on Inclusive Insurance. This digital edition of the conference comes as countries across the globe tackle the unprecedented consequences of the COVID-19 pandemic. Global human development, a combination of the world's education, health and income measures, is set to decline in the year 2020 for the first time in a generation. At this critical moment, inclusive insurance is playing a vital role to get the Sustainable Development Goals back on track, particularly in terms of protecting lives and livelihoods at this moment in time. It is also contributing to a range of critical areas, including poverty reduction, financial inclusion, and women's empowerment. Indeed, the pandemic has shown us how expanding access to insurance is vital. That includes areas like health at a time when 50% of the world lacks healthcare or social protection. Inclusive insurance is also key to protecting micro, small and medium enterprises that generate 70% of employment worldwide. Those businesses will be critical to drive forward the global socio-economic recovery. We also know the increasingly critical role that inclusive insurance will play in mitigating the many impacts of our changing climate. At UN Climate Action Summit in 2019, the insurance and development community recommitted itself to deliver on the ambitious target of realizing 500 million more beneficiaries of climate risk insurance by the year 2025, 150 million through inclusive insurance. This is an incredible challenge, but one we can achieve if we work together. So please allow me to share with you for framing reflections on how I see the work of the conference. Firstly, in light of the increasing complexity of risk that communities face, the inclusive insurance industry must design and develop solutions that are not only about the transfer of risk. The solutions must also focus on the long-term management of risk, and they must aim to build broad family financial resilience. Secondly, governments should recognize the crucial importance of access to financial services, including insurance, for economic development and develop concrete strategies to address critical inclusion gaps. Thirdly, the insurance industry must make digital central to its work. This is not only because of the realities of the COVID-19 pandemic, but because of its ability to improve the products, tools, and services that it provides to those who most need it. Look to a new report by the UN Secretary-General's Task Force on Digital Financing of the Sustainable Development Goals, called People's Money. It points out how digital finance holds extraordinary potential to expand financial inclusion by empowering citizens as savers, investors, borrowers, lenders, and taxpayers. And if you give people the choice, they will invest in critical areas like the green economy, boosting job creation and inclusion. Finally, partnerships are everything. That includes those between the private and public sectors, within government, between ministries of finance and insurance regulators and supervisors, and beyond. So please see the United Nations Development Programme as your critical partner, wherever you are. On the ground in 170 countries, we work with governments on legislation and regulation, the context in which the insurance markets will evolve. And we construct new initiatives with partners from the private sector, all built on the specific needs and realities of people and their communities. As the UN's technical lead in the socio-economic response to COVID-19, UNDP is well aware of the critical need for inclusive insurance. Therefore, we will work on advancing inclusive insurance in a minimum of 20 countries over the next 6 years, thanks largely to the support from the federal government of Germany, a global leader in this space. And to help UNDP's country offices, program countries, and our partners to take advantage of the myriad of benefits associated with inclusive insurance, we will launch a one-stop shop for them later this year called the Insurance and Risk Finance Facility. Finally, I am very impressed with the level of engagement with this conference. It has attracted some 2,000 people from 116 countries. This is quite remarkable for a virtual event. I would like to express my gratitude to all of you for your efforts to advance inclusive insurance at this critical moment, and therefore I wish you also a very productive week ahead. Thank you.
Right. Well, here we are again. Thank you very much to Achim Steiner for that very thoughtful and also inspiring message. And we're now going to proceed with the meat of the session, the content, which is the very exciting launch of this year's Landscape of Microinsurance, the Landscape of Microinsurance 2020. And I must say that it's with pride and significant gratitude that for the first time, we are able to launch the full report of the landscape at the opening session of the conference. This achievement is thanks to many players. The generosity of Luxembourg Aid and Development and the Luxembourg Ministry of Finance, which enabled us to begin the research process nearly 1 year ago, while we secured the support of other co-funders, AXA Emerging Customers, who has consistently backed the program, Agence Française de Développement, who ensured that this year's study will be available in French and Spanish to complement the English version, and the Insurance Federation of Egypt, who are working on the Arabic version of the report. We worked with 25 primary researchers in different countries to collect the data from nearly 200 insurers, mainly during the height of country lockdowns. The commitment and perseverance of both our researchers and the respondents is deeply appreciated. Our best practice group on the landscape, our members of the group provided valuable insights and practical help to find researchers and to connect with regulatory authorities in each country, for example. They also provided feedback on the initial draft of the report. Our suppliers, graphic designers, proofreaders, and translators provided the flexibility needed to get this report to you today. Last but not certainly not least, the network team gave unstintingly to make the launch possible. So why all the fuss? Most of you will have heard about the insurance protection gap, a term that is used to describe the difference between the amount of insurance in financial terms that is economically beneficial, what should be purchased, and the amount of coverage that is actually purchased. That gap is smaller than the broad risk protection gap, which describes the difference between total losses and insured losses. Today, we're focusing on the people protection gap. Without taking into consideration the poor, who living on less than $2 a day in purchasing power parity terms, or the affluent, living on more than $20 a day, we estimate that at best, only 1 person in 4 has any kind of insurance cover. Most of these emerging consumers live in countries where social protection is inadequate if it exists at all, and the vast majority of them work in the informal sector with unpredictable incomes. They are extremely vulnerable to shocks of any magnitude. As we have seen this year with the ongoing shock of COVID-19 and its economic impact, it is all too easy for these households and small businesses to fall back into poverty, eroding the gains of a generation. The landscape studies contribute to our efforts to reach scale in different ways. First and foremost, they provide the only benchmark that exists to monitor how many people are covered for different types of risk. They also enable us to track social performance indicators, such as claims ratios and time to settle claims, ensuring that we remain honest about what is, rather than how we would like things to be. By understanding this information at product level, we are better positioned to work with insurers, their distribution partners, and others to improve the quality of products and services available to low-income households, businesses, and emerging consumers. Because scale is needed for microinsurance to be viable, understanding what customers need and value is critical. And yet, as you will see, the insurance sector is hardly a first mover when it comes to customer centricity. This is changing, but far too slowly, and we hope that one outcome of this week's sessions will be greater awareness of the need to understand the customer, translated into concrete action to carry out the work needed to create relevant, responsive, and responsible insurance that truly adds fair value to those insured. This year's landscape study marks a significant departure from the methodology of the past. We focused on 30 countries on 3 continents with the intention of repeating the study in each of these countries every year. Because the landscape study, as you have already seen, is about far more than research and data. It provides the opportunity to work with those involved in inclusive insurance in each of these countries to drive better products, which in turn, we believe, will result in the scale that is needed to build resilience. And now, let's find out from Alice Mary what we found out.
Thank you very much, Katharine. And thank you, Dirk, and thank you to all the Munich Re Foundation and Microinsurance Network teams for putting on this fantastic conference. Let me just bring up my screen to share with you the results. Brilliant. So thank you, Katharine, for introducing the study. And let me start by sharing with you a few of the headlines from this year's study. So we had a very positive response this year. We had 199 questionnaires submitted across 27 countries in 3 regions. And putting together all the insurers that replied to our survey, we saw a total of $1,060 million in microinsurance premiums. To get an idea of the kind of scale that this really represents, we estimated the potential microinsurance market across the countries that participated in the study. And we did this based on every person in the low and middle income brackets in those countries being protected by one insurance product. And when we did so, we saw a potential market value of $20,500 million. So what we see is that the insurers who responded to our survey, between them are covering about 5% of the estimated potential market across these countries. Overall, we saw between 162 and 253 million people covered. This includes both all the data that was submitted to us in the survey, as well as publicly available data from India. As unfortunately, although India was included in our target countries, we had difficulties collecting data from India, especially as India was in a particularly strict lockdown in the moment in which we were trying to collect the data. So if we take the data from the survey, if we include the publicly available data from India, we see that about 6 to 10% of the low and middle income country, the low and middle income population in these countries is being covered. And this varies between regions. You can see this in the chart below. You'll see that Asia is the region with the kind of the highest coverage of the population. We've seen between 4 and 7% of the population covered. Whereas Latin America and the Caribbean is the region that has the highest proportion of the estimated market value in premiums that's being captured. So the landscape study goes into lots of detail about different aspects of the products that we were informed about through the insurers that responded to the survey. And the full study was launched today, so I'd encourage you to read it. But I just wanted to pick out 4 trends that this study revealed that I think are particularly relevant to the conversations that we're going to be having over this week during this conference. I want to start by talking about the products themselves, and the trend that I'm going to pick out here is the continued rise of low-cost health insurance products. So what do I mean when I say low-cost health insurance products? So these are mainly hospital cash products, which are products that in the place of being kind of a comprehensive product that pays the actual cost of medical bills, these are products that pay out a set amount, usually per night spent in hospital. But low-cost health insurance products can also include, for example, catastrophic health cost products, such as cancer products, which are more popular in Latin America and the Caribbean. In short, they're kind of the lower cost health products that are not offering this kind of comprehensive cover that we might see from a full health insurance product. And we've seen the rise of these gradually over time. We observed it in the last Africa landscape insurance study, and here we really observed this growth across all 3 regions. And they've really established themselves as another key microinsurance offering alongside the traditional products of life, credit life, personal accident, and funeral. And you can see this on the graph on the left-hand side of your screen. You'll see health insurance coming up just under funeral insurance, covering 11.4 million people across the 3 regions. You'll also see it coming up across the premiums collected on the right-hand side of your screen at $44.3 million in premiums collected. And you'll notice that although it's coming up below funeral, it is still lagging significantly behind other product types in terms of premiums. And this is really because of the low cost of these kind of products. So we see across the 3 regions that there is an average premium per person covered of just over $8 in comparison to $14 US when we look across all product lines. In general, even outside of health insurance products, we're seeing all kinds of products strengthening their links with health services, including bundling with telehealth services. We do see much more limited progress in terms of offering more comprehensive medical cost reimbursement type insurance products. Although there are some hints that perhaps as some digital tools are evolving, they may be able to bring down some of the administration costs related to these products, which have been a huge barrier in the past. So we might see movement on that in the future, but really we see at the moment, we're still seeing the growth in these low cost and largely hospital cash products. I wanted to share with you one example that really kind of encapsulates this trend, which is a hospital cash product in Bangladesh offered by telecommunications company Telenor, which combines digital health advice, a teledoctor service, healthcare discounts, and hospital cash insurance. And what's kind of interesting about this product is that it offers a free product to Telenor customers, as well as paid packages. And we've seen it having real success in upgrading customers to the paid option. They have 750,000 paid customers in Bangladesh by 2018. And this really shows the kind of customer demand and the popularity behind these kind of health products that are spurring their growth. I also want to bring up climate risk. I mean, Dirk outlined for us really clearly why this is so important for us to be considering within this conference, and it is indeed going to be a really central topic to the rest of the conference. And I want to highlight one trend that we saw, especially when carrying out the interviews for this study. So this study is made up both of all the data that we collect from the insurers, but also a series of interviews that we conduct with experts and important insurers across all 3 regions. And we saw a few trends related to climate risks. I'm going to start with maybe what we more traditionally think of when we think of climate risks, especially in the microinsurance context, which are kind of agriculture and livestock products. And here we see mixed results. So where there's government support, where there's subsidies in place, we're seeing some really impressive results. So you see the very well-known Prime Minister's crop insurance scheme in India, which has covered 18.7 million farmers in just one season in 2019. And we see these kind of products being replicated, especially across Asia. So a scheme in Indonesia, kind of inspired by the Indian example, covered close to 1 million hectares of paddy fields by 2016. And we are also seeing this not only in Asia, in many other regions, we're seeing the importance of government support for these kind of products. So we see in West Africa, for example, where AXA partnered with CNAS and with the West African Development Bank to launch an index insurance product that protects cotton farmers against damage caused by drought. And here the premiums were subsidized by 50% by the Senegalese government. So there was still an important need to sell this product actively. And where we see this active need to sell, we're really seeing the importance of claims payments in building trust. And in this particular example, we saw how high claims ratios as a result of recent droughts was seen as important in establishing trust and understanding of the product. And kind of partly as a result of this claims experience, the product was able to reach around 30,000 cotton farmers. But I also wanted to highlight kind of a broader trend around climate risks, which is that we've been thinking for a long time about how the importance of agriculture insurance in supporting the world to tackle the climate crisis. More and more we're seeing that these kind of climate products, disaster products, are also being applied outside of agriculture. So we're seeing how, you know, such a range of other kinds of small businesses, particularly, you know, tourism businesses, fisheries, are also impacted by climate disaster and the need to extend coverage to them. But even more than that, I think the conversation around the climate crisis is making us realize that it's not only a matter of these kind of very catastrophic risks. In fact, gradual climate change is impacting on just about every risk you can think of, from food security to health risks. And this is impacting on every line of microinsurance business. And really every line of microinsurance business has a role to play in boosting resilience and in supporting us in handling the climate crisis. And that's a conversation that we've really seen coming out in recent years. We've talked a bit about products, and now I want to highlight a trend that we've seen in distribution. So here we really see this very strong importance of combining digitalization and human touch. And I know that this is a topic that's going to be brought up in one particular session in the conference as well. So I'm looking forward to listening to that conversation. In particular, we see the continued importance of agents. So if you take a look at the graph that's coming up now on your screen, you'll see the proportion of products in all three regions which make use of each distribution channel type. So here you can see that over half of products make use of agents in their sales. And this category covers a wide variety of arrangements. So this is everything from dedicated insurance sales agents hired directly by the insurance company to the agents of an insurer's distribution channel. And it should also be noted that insurers could select more than one channel for each product. So you might not be surprised to hear that agents and brokers were frequently combined with financial institutions and microfinance institutions. For example, we saw that as a really common combination of channels. Nonetheless, this continued dominance of agents stresses the continued need for human touch in insurance sales and in insurance education, especially in the inclusive insurance world where we operate. And during the interviews for this study, we saw that increasingly insurers that had been attempting highly digital approaches are gradually also reintroducing elements of human touch and creating hybrid models. So some of these, for example, are call center based sales, which focus on leads identified through digital channels. As an example of this, I want to share the case of Microinsurance's collaboration with GCash. GCash is a mobile money service in the Philippines where they offer life, personal accident, and hospital cash insurance. And this is a kind of very interesting example of a hybrid model, because although it's possible for customers to sign up entirely through a digital process, entirely through GCash, through the mobile wallet, in reality, almost all clients are brought on board through an active sales process based on leads identified through the data creation capabilities of connecting with this kind of digital channel through the data provided, in this case by GCash. And in some cases, we even heard in the interviews that other insurers are going back to investing in building up their own agent sales force. This is kind of an approach that was tried by many insurers a decade ago, was abandoned in many cases, and we're seeing coming back. But this isn't so much a matter of insurers turning their back on kind of new technology and new distribution opportunities. Rather, what we heard from insurers is that advances in digital tools, advances in mobile payment are making these kind of sales force more feasible at this point. Finally, I want to draw your attention to the MNO channel. So in the previous study, in the 2018 landscape of microinsurance in Africa, we explored the rise and fall of MNO-linked freemium models in Africa. And the results of this study show a similar pattern across all three regions, with MNOs linked to now 3% of products recorded. So in some cases, what we're seeing is that MNOs have dropped their partnerships with insurers. They're no longer offering insurance. But in some cases, what we're also seeing is these partnerships have stuck and they've evolved. So whereas previously the MNO might have acted as the main distributor of free and freemium products, we're now seeing them taking the role of facilitating transaction for paid products. Another key trend in distribution is the emergence of digital platforms. So what are digital platforms? These are virtual spaces that allow for direct interactions between consumers and providers of goods and services. So this is your ride-hailing platforms. This is, Uber, for example. It's delivery platforms, Deliveroo, Uber Eats, so on, e-commerce platforms and freelancer platforms. And these are becoming very well established in Asia. They're growing in Africa. They're growing in Latin America and the Caribbean. And what's really interesting about these kind of platforms from an inclusive insurance distribution point of view is that financial services form an important part of many of their long-term business models. So in many cases, the strategy is to use the digital platform to aggregate a group of users, to aggregate a group of, say, taxi drivers and people who want to take taxis, to create an aggregated customer group and then have the long-term objective of providing additional services to that group of aggregated users. And financial services are particularly often kind of a long-term objective of these kind of platforms. And we see payment services often being among the first services introduced, but insurance is being introduced quite soon after. And this is partly because insurance is seen as a way to directly address some of the problems that these platforms face. So if we take the example of e-shopping platforms, they bring together sellers and buyers. How can they ensure that if I make a purchase from a particular provider, what happens if that purchase doesn't arrive? And it's these kind of trust deficits that insurance has a really interesting role in helping solve. So one example of a digital platform that has taken very much a step into insurance would be Grab, which is a ride-sharing platform popular in Southeast Asia that has a very explicit long-term objective to become a financial service provider. It quickly began offering mobile money transfers and now also, money transfers, and now also offers insurance on a per journey basis as well as travel insurance. So we've talked a bit about products and we've talked a bit about distribution. And I also want to spend a moment speaking about customer value, because as Katharine made very clear, this is one of the real advantages of the landscape study, is that it allows us to pull up information around customer value for products across several regions, across several countries, and have a vision on how well we as a sector are serving our customer base. And we had the landscape does draw out some concerns around this, and particularly around claims. So claims ratios across the three regions are relatively low at a median rate of 23%. The average claims ratio is particularly low in Latin America and the Caribbean, where it's 10%, and highest in Africa at 28%. And when we spoke with insurers during the study, we heard how they felt that claims ratios were being squeezed by high expense ratios of many insurers, that's particularly in Africa, and high commissions for distribution partners, particularly in Latin America and the Caribbean. And we could certainly have a debate, and it's important that we have a debate about whether, say, the rate of 28% average in Africa is an acceptable claims ratio. What I think is harder to argue about, and more clearly a problem, is the number of products with claims ratios in single digits. That's claims ratios below 10. And there we see that a third of products in all regions and a half of products in Latin America and the Caribbean have claims ratios in single digits. And you can see those figures in the third column of the table at the bottom of the slide. Now, there are good reasons why a product might have claims ratios in single digits, especially maybe a catastrophic weather product where you'd expect very high claims ratios one year and very low claims ratios another. But that's not what we're seeing. We're seeing these low claims ratios in single digits being concentrated among personal products. So life insurance, personal accident, funeral and property products. And there it's really hard to see these kind of low claims ratios as not being worrying. This could be bundled products where, you know, the effort hasn't been fully made to secure customer awareness. There could be problems with the claims process. But whatever the cause is, it really is important as an industry that we address these in order not to undermine trust in microinsurance. I also want to take a moment to talk about the gender, because this is the first year that the Microinsurance Landscape Study has collected data on the gender of microinsurance customers. And we saw that insurance providers were able to provide the information. This is kind of split, a breakdown of women and men clients for around 45% of the products that we got information on in this study. You'll see that the ratios vary between regions. So the highest median percentage of female clients was in Asia at 60%, and the lowest was in Africa at 40%. And we think that these likely reflect both broader levels of economic and financial inclusion in certain regions, as well as the distribution channels, which are most commonly used by insurers in certain regions. But I think that it's worth spending a moment thinking about this 45% as an indicator in and of itself, because we know that collecting and monitoring gender disaggregated data is a vital first step in better serving women. And so it's really important that insurers are able to provide this kind of information. And we also see this as a kind of proxy for the knowledge that insurers have of their customer base in terms of kind of basic demographic details that insurers are able to access. And so I think that that can also be an interesting point of debate for us to consider further during this presentation and during the week. So what about COVID-19? I have to start by saying that the data collected in this study was all collected before COVID-19 had the kind of worldwide impact that we see it having this year. So this data was all collected from 2019. So we don't see the impact of COVID reflected directly in our data. However, we did carry out the interviews for this study in the last few months. And so we did have the opportunity to hear directly from insurers and from inclusive insurance experts about the kind of realities they were starting to see unfold on the ground. And so I do want to share with you a few of the early reported impacts of the COVID-19 pandemic that we heard through the interviews repeatedly. So first of all, we saw an increase, we heard from insurers that they were seeing an increased awareness of a range of risks. So this isn't just customers being more aware of health risks. The experience of COVID-19, the shutdowns, the impact on people's businesses is making people more aware of a range of risks that they face. In general, insurers were reporting reductions in new sales and reductions in renewals. They also reported an uncertain impact on claims. So as lockdowns began in many countries, insurers said actually they saw their claims levels go down, even for health claims, because people are kind of avoiding hospitals, avoiding clinics for non-COVID related conditions. And they were maybe perhaps not meeting with agents, perhaps not wanting to go in and make claims. But as lockdowns were easing in many countries, they started to see claims tick up again. And really the verdict was out among the insurers we spoke to about what would be the long-term impact on claims of the pandemic. There's been an increased awareness of the need for business interruption insurance among many actors in our sector. And I think that's a topic that's also coming up during this week. And it's kind of, the pandemic has highlighted this gap really in insuring small businesses and insuring business interruption. We've seen, of course, accelerating digitalization. We've all experienced this, and really no country has been immune. And we just see this speeding up many of the trends that I've mentioned earlier that we saw in the landscape, and also speeding up the kind of landscape of digitalization. So, for example, people mentioned the fact that some regulators have allowed e-signatures, have accelerated their kind of approvals of e-signatures during this time. We did hear that there are concerns that although in some ways this is an opportunity for insurers in terms of heightened awareness of risk, there's also perceptions in some cases that insurers aren't supporting customers through this crisis. It's particularly around business interruption, particularly around small businesses. And although, you know, insurers may have legitimate exclusions of pandemics, for example, in some ways it doesn't matter for the reputation of the industry as a whole. If people feel that insurers weren't there for them, if people feel that insurance was no use for them during this crisis. And we see an uncertain long-term impact on the microinsurance business case. We heard positive things and we heard negative things. So on the one hand, we heard some insurers saying, you know, governments are reaching out to us. There's an awareness among the public sector, among lots of different actors, that these kind of risks are too big for any one actor to manage alone, and there's this need to collaborate with insurers, which is kind of positive maybe for the business case. And on the other hand, there are concerns that really insurers and their distribution partners, these kind of microfinance institutions that are so important to the inclusive insurance world, are really struggling, are having really problems with liquidity, and that as their business gets squeezed, inclusive insurance could get kind of put aside, and we don't have time for these kind of long-term strategic initiatives. And so again, the verdict is a little bit out on what will be the long-term impact on the microinsurance business case. Thank you very much, Katharine. I will hand back to you now for our panel discussion. Oh, I think you're on mute, Katharine.
Thank you, Alice, for such a very clear presentation of the results. If I could just invite our panelists, Garance, Wattez-Richard and Craig Churchill, to put your videos on and so that we can see you and have a friendlier chat, as it were. So we've had some questions that have come in that I think would be nice to just address right up front, because they are about the methodology of the landscape. So there's one question from Monirul Ok, who asks about how we collected the data. So just to be perfectly clear, we collected the data from insurers, so the risk carriers only, and not from intermediaries or distribution partners. As you'll see at the back of the report, we include all of the questions that we asked. We were keen to avoid double counting, so part of the questions included asking the insurers to please name the distribution partners with whom they work, and what type of distribution partners they work with. The second point, the second question here was the key challenges. Well, I think the key challenges are always very similar. This is a voluntary study, so there's no obligation on insurers to respond. And particularly this year, obviously getting hold of people was extremely difficult, as we carried out the primary research from March through to the end of July, and many people around the world were working from home. So I just wanted to address that one question. There was a second question also about the methodology, which was from Andreas Landman, which was about whether we have an idea of the range of underreporting of insurance coverage in the landscape study. So again, a point on the methodology. We targeted 30 countries, as we say, where we identified all insurers active in the inclusive insurance space, and we're confident that where we are reporting the country data, as it will be shown in the country profiles, which will be published in the coming weeks, where we are reporting the microinsurance data, we're confident that that is representative in all cases, unless we indicate otherwise. So I think that answers that question. Obviously, in countries where we didn't get, the 3 countries where we weren't able to get responses, one of them was India. There was another question about India. So we don't have the claims ratio data for India because that has not been publicly reported. We're still hopeful that we will get that in the coming months. So without further ado, I'd like to hand over to our panelists to give them the opportunity to ask Alice perhaps some questions about the research and the findings. So Garance, ladies first, over to you.
I don't know, can everyone hear me? I'm not on mute, right?
We can hear you just fine.
It's the famous after 7 months of more or less confinement where you still manage to put yourself on mute, which goes to show you never really learn. Actually, what I wanted to talk about today is very, very quickly to sort of echo what everyone I think has said in a maybe a more informal way, and I hope that I will echo what people are thinking on this call, is that, of course, it's been a very particular year for 2020, but I don't think it's been, once you agree that unfortunately it's made financial inclusion all the more relevant, which is not a good message and a very hard one to accept. Once you've accepted that, I think it's going to be a year that will enable us to accelerate in a better way. So, I mean, if you take a step back, I think for all of us, it's probably been very strange, right? Because we couldn't travel. We couldn't take planes anymore. And all of us have that, you know, that we're constantly with one foot in a plane and one foot in a country that often isn't ours, being on the ground with our hands in the mud, trying to find solutions to dialogue locally with end clients, with distribution clients, with governments, with regulators. And I think that's probably been very strange for a lot of people. And as a lot of people have said already, our physical networks have been hit, and even GCash, the GCash example given by Alice, where ICII is working with Microinsurance on that project, even that, we've switched from call centers to SMS and simplified the product, but it's still a complicated equation to find partner by partner. So it's become more paramount, insurance. We've said that. I think once you've said that, you haven't said much. But I'd like to take this moment, and maybe all of you can have a thought about that. I was sitting back because I thought, what is it that I'm going to bring that's going to bring value to this conference that's not already in a way been said by this really incredible study that I went through again, that is really impressive, and I think has brought to the fore many messages that haven't been labored enough in the past, and what's been said by Achim and Dirk and Alice. And so maybe you can do the same exercise while I quickly tell you what surprised me positively this year. I think one of the first things is how essential financial inclusion and the building blocks that were put in place has helped countries react well, or as best they could, to the COVID crisis. If I take just the example, I have a few examples. If I take the example of India, and I know that wasn't present and complicated for a certain amount of data for your study, but if you just take the example of how it's channeled emergency subsidies to 200 million women in the March to June lockdown, at least, which that was enabled through the existing Jan Dan program. What had that program not been put in place, and which was significantly lobbied by a lot of people, this wouldn't have been possible. If you look at even Western Union, that has been pushing for a while digitalization, with in great part a driver being financial inclusion and being pushed by all of us, it wouldn't have been able to have a business that grew digitally by 50%, and a lot of people would have been hit by a significant reduction of remittances, which we know represents anywhere between 50 and 70% of the household receiving it. Had digitalization not already been put on its sort of launch pad, this would have never been able to happen. This would have never taken place, and it would have been much more complicated for all of us to contribute to something that actually wasn't even, had to be started from scratch. This is Western Union actually, and even the digital remittance players. I know there's a whole session on this week. I think it's really worth listening to, because it's a channel that's probably been quite under leveraged, and that COVID has put to the fore. If we look, I have another really interesting example that really hit me when I was thinking about how is it that we can turn all of this into a silver lining, because as I was going to say at the end, I think we have lots of points in common, all of us on this call. Resilience is one of them. Hands in the mud, liking hands in the mud is another, but I think it's also pulling on the silver lining. And I was just looking at this Ant Financial blockchain-based mutual aid platform that's called Xianghubao. The people who are Chinese on this call, please forgive me. It's updated its coverage to include COVID-19 related claims, which has resulted in a significant, now we know in China, when we do one move, we obtain in 2 weeks what we obtain, in Europe in 3 years. But still, what we're talking about is, I don't think I've ever observed this elsewhere, that this has led to a voluntary product uptake of more than 100 million users. All of us are dreaming of, the graal of voluntary product uptakes, and how do we do that well, and how do we work it out, and how does it stay sustainable? And I think COVID has maybe taught us. And it's true that, as Alice was saying, the world has taken a crash course on health and life and a variety of other risks, on business interruption, of course, and we know how that's a problem for a lot of insurers. But on health and life in particular, and I think this mandatory product success is just the proof that maybe this is also the moment to seize the opportunity of COVID, maybe a bit more than we have thought of doing before. So that's what's surprised me, and I'm sure a lot of people around the table, have that in mind. The other thing is that there are two things that we've been trying to convince our partners, our distribution partners of, and governments of, is two things. One, that the financial service square, as I call it, which is, if you look at financial services as a square, so it's payments, credit, savings, insurance. A lot of people perceived that up until now as being sequential, that you start with having access to digital payments or any form of payment, and that enables you to get credit. And then when the credit is well organized, you can actually put savings to the side. And then at the very end of all of that, you can think about insurance. Insurance was also always very much perceived as being sort of the last sequential financial service, the more luxurious service that you should think about, because anyway, people informally manage their risk quite well, in a very expensive way, but quite well, and are very aware of their risk landscape that they're facing every day. I think finally, in all of the discussions I've had on video again, which is always weird, not to go to these places, I think it's finally come to the fore that insurance is the sort of the founding ground of all of the risks that are brought about by the three other financial services. And honestly, this has been explained or told to us proactively without us having to prod it, whereas up until today, it had been more complicated. I think the second one is the fact that inclusion is not an end in itself, and that is more of a sequence. And one thing that surprised us a lot is that for a while, we've been trying to show that it has to be a form of sequence, because you need to start with digital inclusion, access and usage, which enables financial inclusion, which enables education and health inclusion, which then enables in parallel gender inclusion and nutritional inclusion, et cetera, et cetera. And the end in itself is not obviously the inclusion itself, but the ability for people to do more, to take more risk, therefore to grow their income and to change socioeconomic status, et cetera, et cetera. And up until today, we had a bit of pushback on that. And what's been really interesting is our partnerships with other global groups that have started to work with us on ensuring that there's that sequence which makes the financial inclusion bit or the financial protection bit more sustainable. I think what makes me, just to finish off, what really makes me proud in terms of both AXA, but more importantly, the industry, is that the public-private partnership area has become much more dynamic. And within this public-private partnership realm, there has been an enlargement of the focus of the public donors or the public participants from climate to also including inclusive insurance from a life and health and P&C perspective. And of course, climate is a priority, should be the focus, but climate risk coverage is very top down, as we all know. It's very sovereign based, it's very catnap based, but the climate has all these impacts and creates the risks everywhere else. And I think we're finally getting into a dialogue from a public-private partnership point of view. And I mean, Katharine, you know this, that the IDF is really one of the key areas today, which was kind of, you know, we all know it was taking up slowly and people didn't have that much time, but slowly it was gaining ground. And now I think, thanks to the COVID, it has really shown what this type of partnership can move forward quickly on. And in great part, thanks to you, Katharine, and the MIN, we've become increasingly concrete and operational. And I didn't have that kind of hope for any form of public partnership before. And I think that crisis has helped us understand that we don't have a choice anymore. Finally, I know this is something that, Katharine, is important to you, is the importance of measurement and evaluation. I think that, you know, you have mentioned how you've revamped the format of your study. It's a great framework, obviously, versus one continent a year, which made comparability complicated. But now we need the help of everyone on this call and institutions like Insure Resilience, like the World Bank on the Global Findex, etc., to contribute to helping collect that data and weigh it against, obviously, political objectives. Because we know that what's not measured not only cannot be improved, but doesn't really exist. So finally, I just want to conclude on the fact that the cherry on the cake to me is also the regulatory shift in our countries, in the countries that we're trying to support. So we all have in mind the one that made the most noise recently, which is the Indian one. That has put in place a variety of different constraints when it concerns microinsurance products, including the amount of reserves needed that have been divided by 5, and how you categorize microinsurance products and ring fence the dedicated companies, much like Nigeria has been pushing for, albeit in a different way, or much like Egypt is doing, the CIMA, etc. countries, which is really, I think, key also in terms of helping the public-private partnerships actually create value more quickly. I mean, I'd like to thank you, Katharine, and everybody else for this opportunity, and Dirk. I would have preferred to be able to say that today that the world is doing so well that financial inclusion is starting to become less relevant, less necessary. I would have loved to be able to say that. It's always been a means to an end, and I think we're nearing it. That's what I would have loved to be able to say. Digital inclusion is ticked, health inclusions are ticked, gender gaps are addressed, etc. But I think if we accept the consequences of this special year on the impact of poverty alleviation, etc., like it's been said before, I think we have to keep in mind that there are a lot of people. It's historical, the amount of people that are today on the call, which goes to show that it hasn't weakened our desire and our motivation to continue to drive financial inclusion. Again, like I was saying, we have all the people on the call here today have many, many things in common. They have creating social value. I think we're all optimists. I think we're all resilient. The world is our oyster. We like putting our hands in the mud. And I think the new one we maybe didn't know about each other was that we're experts in silver linings. So I look very much forward to hearing from you this week. And thank you again to the organizing team who's made this unique event possible.
Thanks so much, Garance. Just a reminder to the panelists, if you could please take care to speak slowly. This is being translated into French and Spanish, which are longer than English. And so if we could support our interpreters that way, that would be great. It's okay. So Garance, thanks for those incredibly meaningful remarks. Craig, I'd like to address a question to you, which is much of what Alex was saying was talking about some rather disappointing claims ratios. And I know, of course, you are one of the fathers of the microinsurance movement. So I have two questions that I'd like to address to you that are partly based on some questions that have come up in the chat as well. The first question is, what is your view? Why are these claims ratios so low? And how does that link to the sustainability of what we call microinsurance products? You know, being perfectly clear that these are insurance services that are designed specifically for the need to meet the needs of low income people. So that's one question, because I'm sure you would have taken note of those rather disappointing, not in all cases, there were some great outliers that we were really happy about, but in many cases. And then the second question, one that's been raised, which really also speaks to something that Garance has alluded to, is where does microinsurance or private insurance fit in these scenarios? So where does social protection enter? And that's particularly relevant to your role at the ILO, but also in terms of what should people be having to buy private insurance for? What sort of insurance should be subsidized? And how can we accelerate the whole process, which we do need to accelerate by some innovative public-private partnerships? So that's quite a big question. I'm going to throw it back to Garance when Craig is done. So over to you, Craig.
Thanks, Katharine. And thanks to the network for pulling together this, this really interesting report that's got lots of great insights in it. So I know it's quite a major undertaking to pull all this information together. And you know, you people behind the scenes certainly can appreciate how difficult it is to get these details. And I think the network's done a great job of synthesizing the lessons and presenting them in a very approachable way that helps us to really figure out where we want to go next. Garance did a great job of summarizing all of the opportunities that are in the report, Garance's silver linings, and they're there, they're absolutely there. And I think that's certainly the upside, even with climate change and COVID being in a strange way an opportunity, because you know, they're demonstrating to the world how vulnerable we all are, and that you know, insurers are really should be well positioned to be able to respond to those opportunities. And so hopefully that will be a starting point to the next evolution in the product space. But the other side of this, the flip side of the opportunities are the huge challenges. And I think that's what your question is getting at. It was really deeply troubling to see the data on claims. And with all the caveats that you have about some outliers being good examples and so forth, but in the aggregate, it's definitely not a pretty picture. And I guess it was surprising to me, even if it shouldn't have been so shocking, because at the ILO's Impact Insurance Facility, we work with a lot of the leading organizations, the innovators, those that are pushing the frontier and testing what can be done. And so we're sort of more often than not working with organizations that have actually pretty decent results in terms of providing good client value. And I think what you see from the data is that the successes from the leading institutions aren't translating or aren't filtering down into the market as a whole. And so I think that's one of the takeaways that I have is, what do we need to do in order to make sure that the sector more broadly is able to embrace some of the lessons and experiences of those leading organizations, the outliers that you mentioned, that really are generating the positive results and are providing good value. The way I interpret the numbers, and maybe Alice can sort of clarify, is that a lot of companies are going for the low-hanging fruit and then they're stopping there. And the low-hanging fruit being the mandatory products, the embedded products, where people get the product automatically, may not even know that they have it, and therefore have very, then they don't end up claiming when the insured event happens. And so it'd be interesting to disaggregate the data, whether products are mandatory / embedded versus voluntary, and to see whether that makes any difference in terms of the value proposition. And I'm not trying to suggest that there shouldn't be mandatory embedded products, because I absolutely believe that that is the starting point. That's where insurers can get to scale quickly and avoid adverse selection and minimize the administrative costs, challenges, and get insurance to people very quickly and very affordably. But it's taking a very short-term perspective if you don't use that as your entry point to be able to then evolve that product offering over time and give people better value. And I say that because, claims aren't happening. If people aren't getting the benefits of insurance, then insurers aren't doing themselves justice in terms of proving to people that insurance works and helping them develop a culture of insurance that that encourages them to want to be able to get access to more coverage or better coverage, and purchasing products voluntarily. So the answer to your first question is, why is it so low? My guess is because a lot of the data points are probably mandatory embedded products where insurers haven't done a good enough job of educating the market, is my guess. And I don't know if Alice has done the crosstabs on that to see whether the voluntary products have any better value. In terms of sustainability, I do think that it undermines the sustainability because it's not stimulating a demand. It's not proving to people that insurance works sufficiently to be able to get people excited about insurance. Regarding your second question, so certainly the PPPs are one of the opportunities that I'm also excited about, Garance. So I do think that that is a space where there is great opportunities, and I think many governments are increasingly looking to the insurance industry as a potential ally, a partner to achieve public policy objectives. And whether it's in the context of climate change, food security, and health, insurance fits into all of these sustainable development goals, and really can make it possible for governments to more cost effectively support their populations to be able to make advancements on those SDGs. But I think that there's still a long ways to go, and really trying to understand what is the role of the public sector, and what is the space for the private sector is an ongoing tension and challenge, and there isn't one answer. Each country will probably reach different conclusions as to where that space lies. But I think that for insurers, the challenge is the same: to not just to be demonstrating to, in this case, public policy makers or public officials that your objective is to help them achieve their objectives, and one of the key ways to do that is through enhanced transparency. I think this report does a great job of moving toward some steps in enhancing transparency in the sector, which is, I think, should be lauded. But I do think that insurers can do more in terms of insurers as a sector can do more moving toward greater transparency, which will really be so important in convincing the general public, but also public policy makers that insurers really want to contribute to these public policy objectives and not just see how they can be padding the bottom line.
Thanks so much, Craig. So Alice, I've got a question for you also based on questions from the chat. So one is about climate risk and the other is about gender. I'm going to take the gender one first. You can choose what order you answer them in. So for the first time this year, we included a question which was both out of wanting to get the information, but also as a proxy for gauging just how much insurers who are responding knew about their customer base. And that question was about what percentage of the portfolio or the policy holders were women, or the beneficiaries were women. So the question that came up in the chat is an interesting one. I'm not sure that you can answer it off the top of your head, but it was about, were there particular risks for which product types, in other words, that had women covered rather than other risks. And then the second question was, for the first time, we included a question about climate risk. And I wondered if you could, climate risk and natural disasters as one of the product types. And I wondered if you could speak a little bit to what that translated to in terms of on the ground products that are actually available and that are popular, if you like, with the beneficiaries or the holders. So over to you.
Sure. Thank you, Katharine. And I just want to pick up very quickly before I answer those as well on the point that Craig mentioned about where we see these low claims ratios. And with the data we have, we can't directly line them up with voluntary versus mandatory. But I think that the product line gives us sort of hints at that, because we do see that, you know, products that are very frequently bundled and are very frequently effectively mandatory. So I think a good example is personal accident in Latin America, which is very often bundled with credit cards and things like that. It's definitely a frequent culprit of this idea that people don't even know that they have the coverage. We see a claims ratio of 8%. So, and then if you compare that with maybe credit life across all three regions, we see a ratio of 33%, which although it's a mandatory product, we thought that perhaps that might be because there's also some interest from the institutions providing the credit and making sure that those claims are paid out. So I strongly suspect that what you mentioned, Craig, is very much true. On gender, I think the question was whether we see more women clients being served by certain kinds in certain risk categories. And we do. We see higher levels of coverage of women among kind of personal products, life, personal accident, funeral, and lower among agriculture. That's the one that kind of jumped out at me as having a particularly low ratio of female clients.
So just to probe on a little bit on that, is that because a number of the ag products, many of which are index-based schemes, focus on specific crops, and those crops may not be the crops that are typically grown by women's smallholders, because there is a gender bias in crops that are grown in many developing countries.
Yeah, I think it absolutely could be. It could be to do with the kinds of crops that are being insured. It could also be to do with the kinds of distribution mechanisms that are being used. I think that as much as product line, it has to do with distribution channel type, because, you know, we see that microfinance institutions, for example, have this historic focus on women clients, and countries where there's a high presence, you know, if you think of like the Philippines, Bangladesh, these kind of countries with really high historic level of microfinance institution focus on women, you tend to see higher rates of women being covered. Whereas some of maybe these newer channels, you know, digital platforms, we don't really have the data. Insurers often don't know whether they're reaching women clients or not. So I think as much as product line, it's about distribution channel type as well. Climate risk. So this was a kind of an interesting one. So in the results, we saw pretty relatively low people covered and premiums collected through climate risk products. But I think that is also to do with the way, and this is something we want to rethink and address next year, the way that this was expressed, because for most insurers, climate risk isn't a business line as such. Property is a business line, agriculture is a business line, and they might cover climate risks within those business lines. So we feel that this kind of low number might not quite be accurately reflecting what's going on. And we also had particular trouble getting data from big kind of government-sponsored agricultural schemes, so particularly this very well-known scheme in India, for example, that we weren't able to get individual survey data on, although we did use some publicly available data.
Could I, Garance, maybe ask you to comment on that point from your perspective as an insurer who's involved both with sort of what I would characterize as normal microinsurance and index-based schemes and climate risk. So Alice's comment that insurers tend to think of this as business lines, and also knowing that a lot of climate risk insurance is focused on sovereign schemes rather than what our focus is. Could you perhaps comment on how do we create this link between high-level climate risk insurance and insurance where the benefits and claims are paid out really to smallholder farmers or small business owners? You're on mute, Garance. We've lost your. There we go. And thank you.
Sorry, I was listening to you. So I think that's actually a great question, and it's one that currently we're asking ourselves very operationally within AXA, and I'm sure all the other insurers are also. I think we just need to really quickly take a step back, and I'm aware of time, so I'm just going to make a very concise answer. But it's also linked to how insurers are pivoting in the way they address financial inclusion. As you say, we're very lucky at AXA because we're able to offer and to discuss with governments from a sort of macro sovereign point of view on climate risk, but we also have now the products in place to bundle that with more bottom-up type products that will be in a way of more value to the end user and to the smallholder farmer, be him a man or a woman, because to Alice's point, even if the policyholder, the smallholder farmer policyholder is a man, then probably the woman works on the land anyway. So it also covers her. So one of the things that's changed is I think that over the years, insurers have learned how to do financial inclusion, which is something they didn't know how to do before. And so their only way was basically to set up public-private partnerships and to have a pool, either mostly through reinsurance, but really to learn how it worked, because this low-income population was a segment we didn't understand. And of course, there are insurers that are much more ahead of us, AXA, in terms of their understanding of this segment, like Allianz, like Chubb, like AIA, etc. And that's great, because as I've said many times, this is not a competitive, I would love to be in a situation where we're competing. I think now it's not sharing the pieces of the pie, it's just getting the ingredients to bake the pie. And so the way that what has helped us is understanding this population better, which has helped us no longer work with intermediaries. Now we work really directly, either with governments or with cooperatives or whatever association will group smallholder farmers or agric related people who need to be protected. So it's smallholder farmers, but it's also on dairy, which are not always included in what we call smallholder farmers, etc. So it's all the people that are upstream of the value chain, right? Your question is, who are very impacted by climate change, but then, what happens to their health and their life and their everyday work? Well, I think that now that we have less intermediaries, we are able to include in the premium a variety of products, bundling them with the partnerships we're putting together with the public sector. And we have this, for example, we're working with L'Oréal in Burkina Faso, with the government, where we have both the climate risk approach, but we're adding hospicash and personal accident. So of course, personal accident, it's going to be a question of how you create it, what you put together. If it includes temporary disability, and if we manage to communicate on that, then the value created in the minds of people because they're protected on climate risk is significant, because we've brought that education and that awareness on personal accident, and we've avoided the commoditization. The same goes for the way we protect against climate risk from a sovereign point of view, but adding a concern with regards to how women are completely unprotected and untaken into account when it comes to the basic insurance that smallholder farmers have quite often, actually, because the climate risk product can be taken through the small loan they take with MFIs. If you look at the crop scheme in India, for example, we're able to protect these farmers at the moment of taking out the small loan with the MFI. We all know, back to your question about gender, that MFIs is going to be more women, and digital credit is increasingly becoming men, right? It's a caricature, the tree that hides the forest, but right now that's kind of the dynamics, and hopefully it'll change. And so if we manage to use that dynamic, to use those channels, to bundle, and to be able to bring our knowledge on parametric, but also on really top-down, person by person, that in a way, thanks to COVID and the digitalization, the mandatory push we've had because we've been whipped into it in a way to go much more quickly. I was reading an article in The Economist where they said they believe that digitalization in emerging markets, but in mature markets with regards to digital payments, because we're way behind, as we know, in mature markets on digital payments compared to emerging markets, has accelerated the process by 3 years. So I think bundling will probably have been accelerated. And as you say, hopefully we'll be able to do bottom up and top down at the same time.
And that's certainly a goal we both share as we collaborate, not just through the MIN, but also through the IDF.
Absolutely.
So we've got about 4 minutes left for the session. We have 30 open questions in the Q&A. So I will endeavor with the MIN team to field those questions. We'll find a way of getting the answers back to you. Bear with us, because of course we are very tied up with the conference this week. As Dirk mentioned, we're hosting most of the sessions in terms of the technical platform, but we'll do our level best to get back to you with responses and inputs from our panelists as appropriate. But I'd just like to give each of our panelists an opportunity to take 30 seconds or so to just put out there what your key wishes, your key takeaway from the landscape study this year, and also what you think would be the best way forward, not just to reach scale, but also to get better and better results in the data that we actually collect every year. So Alice, I think you, and then Craig, and then Garance.
Sure. So perhaps I would just say the trend that really stood out to me, and that I will certainly be thinking about a lot in the coming year, especially in this COVID situation, is this combination of digitalization and human touch, which has obviously become much more difficult, but we kind of defined innovative ways to maintain. And I think it's interesting because it points at some of the distribution channels we've been having around digitalization, as well as some of the opportunities that technology is offering us to reintroduce elements of human touch, and also at this whole client value element around the need for education and so on. So I think that's a really interesting trend, and it's kind of highlighted in the report. So I'd encourage everyone to have a read of the report. That's my 30 seconds, I think.
Thank you. You were timing yourself. Craig, over to you.
Thanks, Katharine. I think one of the things, because you've changed the methodology with the landscape, this is less about trends and more about a snapshot in time of what we're seeing, the state of things were at the end of last year. And so I'm looking forward to future studies where we can start seeing how things are evolving in these countries over time. And I'm hopeful that by shining a light on both the opportunities and the challenges, including the really disconcerting state of client value, that we can make a strong concerted push toward enhancing client value at an industry level. I think, you know, a lot of the examples that have been highlighted are fascinating, and they do provide good value. But how do we get that to be more broadly a part of what's happening in the industry in general?
Thank you, Craig. And over to you, Garance.
So honestly, I find this landscape such an improvement already. The fact that it existed before was awesome. The fact that you've managed to change the methodology to make it more all-encompassing and comparable has, you know, we've reached the next level. So it's constructive ideas, let's say. I think that, but you have this in mind in the next submission, if we can link it better, obviously, with Findex. I think that would be really, really good. Maybe putting it in perspective, and maybe thanks to our work with Astrid from the ISF, putting it more in perspective with the insure resilience objectives. And obviously, we're going to get better, and you're going to get better and better, because all of us will help you year on year on the data collection, part. And I think if we involve more people, and that's going to maybe make your life more complicated, but at the end, make it an even more usable tool and useful tool, involve more the public and the private sector. In terms of the one message, strangely, I've always been against, you know, going into these regulatory discussions, as you know, Katharine, and always saying it's the regulator, it's the regulator, it's the regulator, and blah, blah. But recently, when I see the concrete moves and the dynamic actions of regulators in these countries, I think that what would be great is that each insurer, when it comes more from a bottom-up element, if they could go hand in hand with their distribution partner network, that they have an idea to touch more people with, and that it's being blocked, if they can go hand in hand with that person to go and see the regulator. We've now done it a couple of times. One, for example, in Malaysia, with an e-commerce platform on remittances. The regulator initially said no. They said no, and it was just because we came with a very concrete example. So instead of speaking theoretically, which is not easy, if we can come with a concrete project every time we go and see them, then we'll probably kill the problem of reciprocal distrust, and also enable them to work on a concrete project, which can then be replicated and reach scale, to your point of what my key message would be on scale.
Great, thank you so much, Garance. So we are 2 minutes past the hour.
Sorry.
Oh no, that's absolutely fine. I would like to say that in the countries where regulators are routinely collecting, requiring this information, we obviously do have much better information, with the caveat that that might be limited by the definition of microinsurance in those jurisdictions. So a great big warm thanks to all three of you. I know we're working very closely together, to Dirk for his opening remarks, and also to Jan Kellett and Achim Steiner for organizing the very thoughtful keynote pre-recorded video at the beginning of this session. We will be following up on the landscape, as I already mentioned, with country profiles on each of the 30 countries and the data. Please do visit our website, www.microinsurancenetwork.org, where you'll see the information, and you can download the report that was launched at 6 this morning in English, French, and Spanish. And last but not least, we will be following up this year's landscape with in-country workshops in all of the countries, all of those 30 countries that expressed an interest to do so. So bringing together, as Garance has intimated, the insurers, the distribution partners, and the supervisors, as well as the insurance association. So please do watch that space, and thank you very much for all of your attention, particularly to Alice for writing the report and for getting up at 3:30 this morning in order to participate in this session. So Alice is based in Lima. So thank you very much, Alice. Take care, all of you. Enjoy the session. So many good sessions lined up for this week with great speakers. And I wish you all to stay safe and look after yourselves and each other.
Thank you, Katharine.
Thanks, Katharine.